Good morning, traders. It's 8:02 a.m. on Monday, the 27th of December, 2021. Thanks for joining me today on this broadcast of episode number 2138. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopping right to it this morning, going into the pre-market summary sheet here. We have a market that has a slight risk-on tinge, and that came on this morning at about 6 o'clock or so Central Time. This was mainly driven by a news event out of the UK. UK's Prime Minister Johnson is not expecting to introduce COVID limitations in England. And we saw a quick pop higher. The market is generally nervous about the Omicron virus and the just crazy number of cases. Some places hitting the highest number of infections since the pandemic started. That's always a debatable thing because we do a lot more testing now. We're much more proficient at testing now than we were then, but that's not really relevant because the fact is a lot of people are getting sick, and luckily the sickness is not so intense. So the market is nervous about any shutdowns or delays, and we see a reflection of that immediately in the indices, especially the small caps. So that's the big news today. Just remember, this is the last week of the year. You have to be nuts to be here this week, actually, but expecting some pretty decent movement this week because it is likely to be a little bit thinner, and we're expecting to get some news out of various credit cards, vendors, and things like that about the shopping season this year for Christmas, and it'll give us an idea of how healthy spending is. There's also a lot of input coming in regarding salaries. White collar workers are also getting a bump in their salaries. Not only, excuse me one second. So it's not just hourly workers getting a bump higher in wages, but salaried workers are also seeing that same benefit. So I'll be here all week, working shorter hours because still dealing with a newborn. In fact, if I don't make any sense this morning, I've been up since about 12:40 a.m. and didn't go back to sleep till about 5 a.m. this morning for about an hour before I had to jump up, get dressed, and come into the office here. So I'm not expecting to do a lot with today. I'm definitely not trading today in my current condition. Just baby's digestive system is becoming is starting to operate, and therefore that results in a lot of discomfort and colic and whatnot, which amazingly we don't have a solution for in this day and age. But baby's sitting there crying all night, so here I am. So it's all good. She's healthy, and that's all I care about. Today, 10:30, we have Dallas Fed at 6:30 p.m. this evening. We have the unemployment rate out of Japan, and then at 6:50 we have industrial production. This week really doesn't have much in terms of releases. The biggest number we have this week, the highest tier number, is occurring on Thursday at 8 p.m. Eastern Time, 8 p.m. Eastern Time on Thursday. That's the Chinese MBS manufacturing PMI, an important figure, 50.5 is the expected number. Looking at the S&P, so we can see the indices are all positive. It's a holiday across parts of Europe. The UK has Boxing Day, Canada, Hong Kong, I think, and several other places are recognizing the day after Christmas as Boxing Day, so they're off. Volumes very, very light at 91,000 in the S&Ps, and the inventory is 95% long. So we have basically lingered on top of Thursday's settlement. Remember, Friday was closed. So we've lingered above, and 95% of our volume is above. The volume is pretty low, and we've established a multi-distribution profile. It was a balanced profile between 47.2650 and the low 47.13. And then we popped up at 6 a.m. Central, 7 Eastern, and have traded up into the RTH all-time high. The RTH all-time high is 4733.75, and the high currently is at 47, what is it, 35, 47.35. The Globex high, the overnight high, or the extended trading hours high, whatever term you want to use, is somewhere around 47.43 and a quarter, 47.43 and a quarter. So we're at or near all-time highs. We have not let go of hugging that all-time high, despite the pullbacks, despite Omicron, despite Delta, despite whatever. Inflation, the Fed tapering harder as of December 15th. It doesn't matter. There's money to be invested, and the money keeps pouring into the stock market. So, and the stock market, the U.S. stock market is strongest, so we're seeing that reflected here. Range so far is about 21.75 points, which is pretty healthy. The point of control of 47.20. I'm expecting this thing just like Friday. We talked Thursday. We talked about the two scenarios. The second scenario was a push to 47.33. Was looking for rejection to go lower and to push higher, which is basically what happened. It did not quite get to 33. I think it stopped at 30, 31 or something, 31, 32. So scenario 2 was in play, and I'm expecting more of the same today. I'm expecting it to kind of push through and squeeze into the mid-century figure at 47.50 or so. We have a bunch of measured moves I'll go over in a minute. So volume is quite light. The range is okay. It's just a little under the most common range available, and that's all she wrote. With cryptos, ETH is holding steady above 4,000, and Bitcoin, which has dropped quite a bit, is actually making its way back to resistance. Here's something I posted a few weeks ago. You could see that we pushed to support. Support's expected around 42,000. We pushed to about that figure, and we're pulling back to the first piece of resistance here at 52.9, 53,000. That's where Bitcoin is. It's spiked through on decent volume, and now it's creeping up. So just keeping an eye on that for those of you who are in crypto. Let's take a look at the S&P and look at what we did on Thursday. So on Thursday, we had a gap up. We opened at 46.9650. We kept this gap open. We made a very feeble attempt at pushing lower. We pushed down 4 ticks before squeezing higher, and we had some pretty good lifting here. Let's turn this off. Pretty good lifting right off the get-go. We started to create this consolidation that we broke to the upside. The IB came in. The IB got poked right away, and the IB acted as support later in the session, and we end up just squeezing to about 47.31. A reminder, 33.75 is the RTH high. So this Friday was a gap and go type of trade, gap and go trade, and it pulled back into the close. The profile shows a clear excess. So if we look at the low here on the chart, you'll see that there's a clear excess. This is an unfair price range from 47.07 down to 47. I think it was 47.08 actually. Yeah, 47.08 down. We have an excess here. So the idea is to keep an eye on that and make sure we don't fade that. We don't try to buy that area if the market drops. If it drops below 47.08, We expect it to trickle down into 4,700 and through probably to the gap fill of 8,750 and back into 83, the 83 quarter, 8350 area down here. So overall, just it was a drifty day. It was very thin. A lot of it was done on offers pulling versus versus buyers aggressively lifting the offer. So you could see as this thing climbed, the delta was completely flat, just absolutely flat into the close. Some de-risking on the close, causing some selling. But overall, there was no aggressor participation on Friday at all. It was basically a drift. This is, let's switch this to a 30-minute. This here is a 30-minute chart so far, and you can see there's a multi-distribution profile, 2 distributions this morning. One is capped at the 47, 2650, 26 area. So we hit 2650 early. We went to 26, pulled back, and pushed through. So I'm looking for some sort of reaction at the 2650, 26 if we pull back this morning. I'm not really sure what this thing wants to do. All I know is it's definitely accepting higher prices. It is facilitating trade to the buy side much more easily than to the sell side, and that's what I have to go on. Why is this? Okay. And that's what I have to go on. So given how bullish this thing is opening, we're opening in a bit of a gap this morning. I'm expecting a small pullback and then a drift up to 4750 as a primary scenario. But you can see from Thursday, we had this really multi-distribution profile, a lot of active price discovery. Volume was pretty anemic today and on Thursday. So to me, all in all, you got to be cautious on the short side. And the book is relatively thin. The book looks more like a NASDAQ than it does the ES. In terms of the overall picture, let's take a step back and look at the composite. If you look at last week's action, this box here, each box represents a week. The change in color boxes represent a change in month. You can look at last week's weekly action, look at the profile, very heavily distributed, a lot of price discovery, pretty weak structure last week. There wasn't like a balance that was then broken out of. It's pretty choppy trading. You could see gaps in the profile. You could see that the point of control did not shift up last week, despite the fact that we closed at the high, at or near the high. The overall point of control, the MC point of control of last week remained on the low end of the range. That's not a very healthy rally, in my opinion. In classic auction theory, we would expect prices to shift up, basically always checking prior balance or as much as possible to build on a foundation. Kind of like the analogy to this is to define whether structure is strong or not. The best analogy is think of a brick wall. Imagine a brick wall where every brick is laid, where you're going back and filling every line before going up one layer, filling every line, then going up one layer and climbing higher and higher. That's a good foundation. That's a strong wall. What you have here is a line that's got a bunch of bricks missing, never really going back and filling those areas, kind of bridging above prior bricks, and there are areas that are gaps, and then you keep going higher and you're building weird openings into the wall that are not intended to be there, and you're going higher and higher and higher. As the weight gets heavier in a wall, those gaps down below present areas where the structure can collapse. Think of it that way. We expect the market to check its work. It's moving up. I mean, Bitcoin is doing that, right? Bitcoin kind of runs, then it comes back to prior balance. You can see the balance right here, balance, balance, comes back to prior balance, moves to the next area, pulls back to the last area, checks it, moves to the next area, creates new balance, moves back to the prior area, checks it, and so on. So this creates a pretty strong foundation to keep building. There's a cement layer in between each layer of bricks, and the weight can be distributed throughout the wall, and it's a strong wall. That's what we would want to see in the structure for the ES. So when we see a lot of gaps here, and we see weird multi-distribution profiles throughout, this creates a situation where the market's kind of getting ahead of itself. What does that imply? It doesn't imply that it can't keep going. What it implies is that once it turns over, when it goes through this structure, it can drop right through the structure quite aggressively, versus an area that has a lot of volume. It tends to pull back and then consolidate in that area before the next move. So this isn't very good structure, is the bottom line. So that's where we stand. The current range, you could see the value high of range. The most common range currently is 35 points per day, and the normal range is up to 46 points. That's actually shown on the Convergent Trading pre-market summary sheet for ES, NQ, RTY, YM, and crude oil. It gives you what the normal or the expected range to be, the expected range limit, and the rotations. Make sure you pay attention to those figures. So that's the composite. Looking at the overall picture, I'm going to step back and look at the 4-hour chart on Edge Pro X. And you could see, look at this, it's right up against, this is like in the old can slim or IBD approach. This is your cup and handle formation. I'm not much on patterns, but this has a lot of strength. It's got all the characteristics. You have a low, a higher low, coming back to the same high, likely to pop through pretty strong. The YM is skewed a little bit to the downside, so it's got a bit more of a triangle. The NASDAQ is kind of the weakest, currently relatively weakest compared to its prior high, whereas you can see the S&P 500 stocks have a flat line across the top. I'm drawing these lines pretty good today. The NASDAQ is really skewed downwards, and of course, the Russell, which is most likely to be affected by disruptions like inflation, pandemic, supply constraints, whatever, those smaller caps are going to get hit harder. Their bottom lines are affected much more. They're less immune or resilient. And so it's looking a lot weaker, but the Russell can catch up very quickly once things get rolling or clear up. The bonds don't really, oh, by the way, I don't know if you were at the fireside chat on Wednesday night. We had Jeff Snyder on, and he talked about the fact that this inflation thing is nonsense. And I listened to his podcast called Make Sense. Please look up this podcast and listen to the last episode. It is fantastic. He goes through and he explains why the bond market is not responding to this hyped up fear of inflation. He believes that deflation is more likely. And he goes into the fact that this inflation is really being caused by supply disruptions, supply constraints, rather than actual true lasting inflation. And so we see that in the bond markets, we see it in the treasury markets, where they're not really responding to what seems like heavy inflation or lasting inflation. While Jeremy has dropped the transitory language from his speeches, the money markets, the treasury markets are still well entrenched in that transitory phase. This is going to be an important thing going into the Q1 of 2022. Pay attention there. We're seeing crude take a bit of a pop higher. I'm still waiting for crude to hit my target at 74, 75, 75 even. I'm looking for crude to push up. Crude's got that same formation as the S&P with a higher low, and it's just dragging its ass over here. But it looks healthier this morning. I'm expecting crude to push higher. Nat gas is just dead in the water, really. It's been resisted by its monthly VWAP throughout. Whew, that's a lot to cover. It is Monday. This is the longest trader bite of them all because we want to go through and look at the big picture to set us up for the week. Let's take a look at what's expected for today. This, of course, brought to you by EdgeClear. Today, so what are we looking for? The big idea. What's the big idea for today? Again, we left a gap behind right in here. Left a gap behind. I actually didn't mark this gap. I need to fix that. We left a gap behind. We closed relatively okay, not super strong. We didn't close at the highs. We had a bit of a, as I said, profit taking or de-risking into the long weekend. But here we are above. To me, I'm looking for a small pullback, potentially back into the point of control from yesterday, 47.15. Look for the value high of Friday, which is somewhat valid, is 47.23. The high in the overnight session and the LVN area is 47.26, right? So in that idea, this is way too zoomed out. Let me just, I don't like how zoomed out this is. So we have this 26 right here, 26. We have value high at 23. To me, this is likely to pull back into 23. The point of control from Friday was at 15. Not expecting it down that far. I'm expecting it to pull back into the 20s and then push up and then just drift its way up to the next measured move target, which is 47.40. That's the primary scenario. So a little bit of a pullback, a little bit of a breather that is likely to continue across the top. Secondary open auction that enthusiastically squeezes the all-time high for RTH, the 33.75, which is likely to happen right here at the open. We're at 31.50 currently. Push into 40, consolidate, come back in, and then just sit here with a higher high, higher low, and just dead in the water, given that it's Monday of the last week of the year with nothing on deck for the news, nothing to feed the market, new information in terms of repricing risk. The market's fantastic at repricing risk and valuing the product. And so overall, it's just a push and then just sideways. I'm only going to be here for the first couple of hours today of trading, but look for it to be sluggish, although thin. It's likely to run through stops quite a bit. Lots of shenanigans take place this last week of the year. I know this was a long one. Thanks for tuning in, and I'll catch you tomorrow morning. Take care.